I think what the mistake people think is they have to buy a whole Bitcoin, and I mean, they can buy a Satoshi, a Satoshi every day, instead of a latte. And more importantly, you know, if Bitcoin network value plays out in Bitcoin, yeah, let's take Urian's number.
Even a small Bitcoin investment today could serve as a shield against dollar inflation, with its value projected to surge 20x, leaving fiat currencies far behind. This bold prediction comes from Thomas Lee, co-founder and head of research at Fundstrat, who highlights Bitcoin's transformation into a legitimate asset class. Backed by financial giants like BlackRock, the world's largest asset manager, Bitcoin has gained credibility in traditional financial circles. BlackRock CEO Larry Fink advises investors to allocate 5% of their portfolios to Bitcoin, recognizing its potential for substantial returns. Lee points out that even modest investments in Bitcoin have already changed lives, with early adopters reaping massive rewards as the asset's value soared. With financial institutions increasingly endorsing Bitcoin, it's no longer a fringe investment but a cornerstone of modern portfolios. A small commitment now could yield exponential growth as adoption accelerates and Bitcoin's dominance in the financial landscape strengthens. As Bitcoin continues its upward trajectory, Lee's analysis underscores the opportunity for investors to secure long-term wealth. By embracing Bitcoin as a hedge against inflation and a tool for diversification, even cautious investors can position themselves to benefit from the revolutionary potential of this digital asset.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
You know, Bitcoin is now essentially a bona fide asset class. I mean, it has the backing of BlackRock, which is the largest asset manager in the world. Larry Fink even today was speaking post-earnings about how important Bitcoin is to the future of BlackRock, and it's something that they're encouraging clients to adopt. I think that the mistake someone might make if they're interested in Bitcoin is thinking they have to go 100% of their portfolio into it. They only need to put 2% or 5%. And, you know, if you think about someone sitting on cash, that's like 1 year's worth of interest on their portfolio. They just have to dedicate to crypto. We made that recommendation when we first wrote about Bitcoin, that they should put 1 to 2%. Today, if they didn't rebalance that recommendation, it's 80% of their total portfolio. So it's been a huge winner for our clients, and many have told us it's really changed their lives by making what they saw as a kind of a low risk bet, 2% allocation into crypto. And I think that's how people should look at it today, because Bitcoin isn't peaking. It's not that widely adopted yet. There's still so many skeptics, and there's many financial firms that are restricting their clients from having access to exchange versions of Bitcoin. So the ETF today is not even approved for many firms, and it tells me that there's still a lot of future holders of crypto. And I think the mistake someone could make today thinking Bitcoin's not relevant is the financial system does work really well in the US for wealthy Americans, but even in America, I think that only 45% of Americans actually have a bank account, and another 25% consider prepaid credit cards and debit cards as their primary form of banking. I mean, banking is very expensive in America, and that's for one of the wealthiest nations in the world. Outside the US, crypto is really going to prove to be a much more low-cost banking system for folks, especially if they want to do remittances and move money around the world. I mean, I think Bitcoin's blurring, but even what the definition of money is, it's already blurred the definition of community benefiting from holding something. Because, in a traditional financial system, let's say you take Amazon and you have Amazon customers, and they contributed to the growth and the fact that Amazon is one of the largest companies today. It's really the customers and the loyalty of the community of buyers and sellers. But the only people that benefited from that are actually the shareholders, the ones who actually provided the capital to Amazon. So it didn't create value for the community itself. I mean, Bitcoin is so different, right? Because Bitcoin is benefiting those who are actually holding it and using it.
According to Tom Lee, Bitcoin's adoption is still in its early stages, leaving significant room for growth. Despite being recognized as a legitimate asset, Barriers such as skepticism and limited access, like the lack of ETF availability through many financial firms, have kept Bitcoin underutilized. Lee predicts that as these obstacles diminish and adoption among individuals and institutions accelerates, Bitcoin's value could soar to unprecedented levels. This early phase of adoption presents a rare opportunity for investors to capitalize before Bitcoin becomes fully integrated into mainstream finance. Lee emphasizes that this period of transformative growth is a pivotal moment, where Bitcoin's increasing acceptance and utility could generate substantial returns for those who seize the chance to invest now. As Bitcoin continues to gain traction, Lee's outlook highlights the immense potential for wealth creation. The breaking down of barriers and growing institutional interest signal a future where Bitcoin plays a central role in the global financial ecosystem.
That's why I think it is really blurring what an asset is, because it's blurring loyalty and rewards along with equity and capital and rent seeking. I mean, all these concepts together. So the idea that it's also blurring the definition of money, to me, makes sense. I mean, I've been following markets for for more than 3 decades, believe it or not. And so I've experienced and covered many recessions. Recessions rarely happen when markets are all saying a recession is imminent. Markets participants aren't that smart. So the fact that so many people think a recession is imminent, and we see it. I mean, we do many meetings with clients, institutional investors, that view recession as their base case. I mean, that would just mean everyone suddenly is a great forecaster of the economy. And as you know, nobody can forecast the economy. We don't try to forecast the economy, but the only reason we think a recession is less likely is because everybody thinks a recession is likely. Mining is important for Bitcoin. I mean, there is no Bitcoin without mining. And the miners, I'd say it's been trickier as equities, because I'm thinking about them as stocks, because they are essentially beta to Bitcoin. But I'd say over the course of the cycle, they should outperform Bitcoin. But it's, of course, I know it's been tough because, we have a lot of clients that have been long miners. And, today's been an okay day, but really for this year, it's been very painful for them to own it versus Bitcoin.
This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness. I know yesterday's pullback was really painful, but to us, I think it's a good opportunity for investors here. As context, the market has been bleeding lower. If you look at internals for the last 10 days, yesterday looks capitulatory because not only did we have a 90% down day, but the VIX, the spot VIX, exploded by 75%. There's only 4 times in history where it's risen 60% in a day. So yesterday was the 5th time in its 35-year history. Of those 4 times, the market recovered all of its losses within a week, 3 out of the 4 times. The 4th time it took a month. So I think what you had was people panicking to get out of what they thought was a momentum trade that's ending because we're so close to year end. But here's the interesting thing. The forward VIX futures curve barely moved. So it was almost as if people were seeking protection through the VIX yesterday. Well, unfortunately, when markets get nervous and they're risk off, and of course, buyers disappear, stocks that aren't as liquid get hit harder. There's a lot of folks who don't want Bitcoin over 100,000, and some of it may be the exchanges themselves are concerned because there is a pretty low supply of Bitcoin available over the counter. So you have a supply shortage. I'm still confident Bitcoin's going to close much higher before year end, well above 100,000 before year end. It's just a matter of time.
Tom Lee has made a bold prediction that Bitcoin will reach $250,000 by the end of 2025. This forecast follows his accurate predictions last year, including the S&P 500's 24% rally and Bitcoin surpassing $100,000 in 2024. Lee's confidence in Bitcoin's growth is based on 3 key factors: the introduction of 11 spot Bitcoin ETFs in January 2024, Bitcoin's halving event in April 2024, and the impact of falling interest rate. The launch of Bitcoin ETFs has simplified investment for both institutional and retail investors, driving significant demand. Funds like BlackRock's iShares Bitcoin Trust have already attracted $35 billion in net inflows, reflecting the growing interest from institutional players managing trillions of dollars. Additionally, the halving event reduced the supply of new coins, creating upward pressure on prices as demand grows. Historically, Bitcoin's price peaks 1 to 2 years after a halving, with its 60% surge following the 2020 event serving as an example. Finally, lower interest rates have created a favorable environment for risk assets like Bitcoin, encouraging investors to seek higher returns. Lee predicts that 2025 will be a volatile year for Bitcoin, with its price possibly dipping to $60,000 before soaring to $250,000 by year's end. He stresses the importance of holding Bitcoin with conviction, noting that most of its annual gains occur within just 10 trading days. Selling during downturns could mean missing out on these critical gains. While optimistic, Lee cautions that Bitcoin's high volatility and the potential for losses require investors to approach the market with care. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.